Hi, I wanted to share some very important information with you based on my personal experiences in the financial industry as well as working within the car industry. So many years ago, when the real estate market crashed, I took a job working at a car dealership. What I then found out was that many of my clients that were asked to pay a down payment were actually paying towards my commission. I was very shocked and surprised that that was the case. I always thought that down payments were a necessity for clients in order for them to purchase a car. I quickly found out that that is not the case. What happens when you go into a dealership is that two things occur. One is that you are often sold interest rates. What do I mean by sold? I'll tell you. I had a client come in and they were offered a 16% interest rate at the time because they'd had okay credit. Not really bad, but just okay credit. When I went to the back office to speak with my sales manager, what I found out was that the bank had actually offered that client an 11% interest rate and that the dealership actually sold the client the higher rate. Had that client negotiated their interest rate down, they would have been able to pay much less for the car than they were asked. In addition to that, they were asked to make a down payment. That down payment had nothing to do with reducing the interest rate because, as I just stated, that interest rate that they were offered at 16% was never going to be reduced to the 11%. So, and all in all, I'm telling you, always negotiate, always go into a dealership under the best conditions possible. Of course, there are times where you will need to go into a dealership and you will need to purchase a car because situations just happen. We all understand that. However, if you have the opportunity to plan for a purchase, a large purchase like a home, or a car, it is best that you get your credit lined up in order for you to have the best opportunity at negotiating great rates as well as getting cash back on cars. Cash back on cars, I'm sure that's what most of us are here for. And as some of you know, cash back on cars has to do with the rebate. What many of you think is that a rebate only applies to high-end, expensive luxury cars. That is not the case. You will find in this message link below that rebates actually apply to almost every car that you purchase. Some of those rebates, they will tell you only apply whether you're military or you're turning in a car of similar brand and style. That is sometimes true, but not often the case. Many times that rebate can go back to you with or without you being a first time, second time, or third time owner of that brand and style of vehicle. So just be prepared to go in there and negotiate. Be prepared to get up and walk out if necessary. I often tell this to friends and family members when they are going in to purchase a car. Do not sit there. If you feel that you have done your research, you have great credit, you want the best deal, and they're not offering that deal to you, be prepared to get up and walk away. Many times we don't want to walk away because they have us so enticed by the car that we're willing to sit there and take whatever it is that they give us. Just understand that you have the power to negotiate interest rates, terms, and conditions, as well as get cash back in your pocket by activating the rebate. Instead of it going to the dealership, it goes directly to you as a cash check in the mail. So now that you were able to negotiate an amazing rate for your car or able to get cash back on your deal, let's talk about reducing how much you're going to pay on the overall loan. So the way to do that, there's two different ways that work simultaneously together. The first thing that you're going to do is you're going to split your payments up into two payments every month. You're going to make one payment on the due date, but prior to the due date, you're going to make half of the payment in the middle of the month. The reason for this is because you're going to be making this payment. It's going to help reduce the amount of interest that you pay overall on the life of the loan. For the second part of this process is called rounding up. Remember I told you that you're going to take your monthly payment and split it into two payments. So if your payment is, let's say, $500 a month for your car note, you're going to pay $250 each time. Round that payment up to $275 if possible, and continue to do that throughout the life of the loan, as well as split the payments. You'll have your car paid off in little to no time. Financing isn't for everyone, but you can either play the game or get played. And if you're going to play the game, you got to know the rules. Thank you so much for listening. Let's get it.
Hello, I am your personal financial coach. And first of all, I would like to applaud you for downloading this training. It shows that you are attempting, you are trying, you are putting forth an effort to get yourself together financially, and for that is simply amazing. Now, my session is a little bit different. I will be discussing with you ways to save money when it comes to either buying a cash car or buying a pre-owned car, and these are based on my own personal experiences as well as things that I've learned since being a financial coach. The biggest tip that I will give you is, if you can, buy a cash car. I know we hear that a lot and you think of a cash car as something that you really don't want to drive, but you can actually find some very reliable cash cars. And simply, a cash car is just a car that you pay for cash. You can either buy it offline on Craigslist, on Auto Traders, or you can go to auctions where they sell cars. But a cash car is a car that you put cash straight down. There's no financing, there's no leasing, there's no extra stuff. It's just, this is the price of it and this is what you pay for it. Now, the reason that I suggest getting a cash car is simply because once you pay for it, there is no finances, there is no interest, there is no monthly bill that you have to pay. And also, it is a way that you are able to reduce your insurance costs, because in most states you only need liability to drive your car. So whereas if you're getting a brand new car, you need full coverage because you don't own the car outright, you're still financing it. But for a cash car, everything is done in the same day, and now you have the title in hand and it is your property, and you only need liability. As I said, in most states you only need liability, so that saves you money. So that is my strongest suggestion to you. If you are not caught up in the image of a brand new car, you don't need the brand new car smell, definitely consider getting a cash car. Now, with the cash car, I know you are thinking to yourself, I don't want anything that's not going to be reliable, because if I'm having to chunk out money every month for maintenance on the car, then I should have just gotten a new car, right? I know that's what you're thinking, because a lot of us think the exact same way. So for the case of a cash car, you can do two things. You can either take it to a mechanical shop that you trust, that are going to tell you the truth, and get them to inspect the car and tell you their opinion of it, or either you can have a close friend or a friend of the family inspect the car. You also can go a little farther and research the Carfax. Also go online and read reviews about that car. So just because it's a cash car doesn't mean that it's necessarily a bad car or a bad deal. Sometimes when people die and their estate is left, the family members sometimes sell everything quickly and at a reduced rate. Or either you can have a family member that has an extra car that's sitting around and not in a bad shape, but they just don't have any use for it. So sometimes you can catch a great deal and pay cash for the car that you desire. The second bit of advice that I will offer you is that if you have a brand new car, or either you have a pre-owned car or either a cash car, whatever the case may be, keep your car as long as possible. And I often use this phrase, drive it until the wheels fall off. And the reason I say this is because I feel as if the car industry has a setup on a cycle that every 3 to 4 years we are supposed to find our way to a car lot to purchase a brand new car or purchase another pre-owned car. And I don't believe that that's very smart. If you by chance have your car and you decide to pay it off, or either you have a cash car, the longer that you keep that car, the more value that you're actually getting out of it. Now, the person that has purchased a brand new car today and in 3 years they're going back to get another brand new car, they're keeping themselves in debt, because every time you turn around they're having to shove out more money for a car payment. Now, the person who kept their car and decided to pay it off and decided also to maintain the quality of the car by getting normal maintenance done on the car, this person is actually saving money because they still don't have a car payment, and also their insurance rate is reduced. So as I said earlier, if you can, please, please, please keep the car that you have. I know it's a strong temptation because the car industry invests billions of dollars in advertisement to get us to come out to the dealership and to tell us why we need this brand new car. But if your car is still getting you to point A to point B and it's causing minimum problems for you, keep it until the wheels fall off. So maybe you don't want a cash car. My tip number 3 is for you. If you do not want a cash car for whatever reason, maybe a pre-owned car is best for you. Pre-owned cars are great choices if you, one, want something that's not too old, and two, you also want a car that has low miles. My suggestion for you before purchasing a pre-owned car is to get pre-approved from a credit union or your personal bank. The reason I suggest that you get pre-approved is because most of the time the credit union or your bank will provide you with a better interest rate than the dealership would. My next tip is, if you are pre-approved, stick to your pre-approved amount. Do not allow the dealership to force you into getting something that you cannot afford. If your number is 20,000, stay within that range of 20,000. Do not exceed that amount of 20,000. And lastly, do your research, and do your research. Even if the car is pre-owned and has been certified pre-owned and is low miles, you still need to do your research on your car. See what people are saying about it. See what type of malfunctions are going on with the car, and see if you will enjoy actually riding the car. A few years ago, I purchased a pre-owned car with low miles. The only issue that I had was the car was actually a bad car. If I would have done my research prior to purchasing the car, I would have found it out. By time I realized that it was a bad car, it was too late. I was already into the financing process. I was already the owner of the car. My tip number 4 is, don't get caught up in the monthly amount. The monthly payment means nothing. It means absolutely nothing. I oftentimes hear a lot of people say, if I can get a car around this amount or that amount, and really they don't understand how interest and the dealership works. If they can get you in a car based on the monthly payments, they will fix the numbers to do just that. Where they make their money is if your interest rate is high and you also decide to finance the car for a longer period of time. So a car that is, say, $20,000 could easily turn into $25,000 because of the interest rate and also how long you finance the car. So look at the numbers. If it doesn't make sense, it doesn't make sense. Sometimes it's better to pay a larger amount in the monthly payment so that you can pay the car off quicker and avoid the interest rates. Tip number 5, always know your credit score. You should not be at a dealership in the market for a brand new car or either a pre-owned car if you do not know your credit score. There are thousands of apps and programs that allow you to check your credit score for free, and also you can use your annual privilege of checking your credit score for free each year. Tip number 6, if you are like many of us, including myself, who purchased a car, whether it been a brand new car or either a pre-owned car, at a time where your credit score was a little bit lower than you wanted it to be, then you should consider now, if your credit score is higher, you should reconsider refinancing your car. Refinancing your car is pretty much just redoing the auto loan paperwork so that you can get a better interest rate and possibly a lower monthly payment on your car loan. If your credit score is under 600, you probably should work a little harder to improve your credit score so that you can actually maximize the benefits of refinancing your car. Once again, in this situation, you would need to know your credit score. You will also need the information about your car loan, your current car loan. You need to know how many months you have left on this current loan, and also your interest rate on the current loan, and of course, who you have that loan through. Once you gather all of this information, you can do your research or homework and find a credit union or another bank to take on the auto loan. Now, if you are upside down on your car and your car is actually not worth the amount that you have the loan for, then you will not be able to refinance your car. Tip number 7. Life happens to all of us, including yourself. If you are financing a car, whether it is a new car or a pre-owned car, and you come into a situation where you cannot pay your monthly car note, do not, I repeat, do not pay your bill. Instead, call the lender up and explain your situation to them and see if they will allow you to extend your current loan for 1 month on the back end. This will allow you an opportunity to catch up on your bills and do the necessary things that you need to do. Thank you so much for downloading this training. I hope that the information provided to you today will benefit you in purchasing your new car, whether it's old, new, or pre-owned.